not one thing, it's another thing every day. But today is May 13th, and it's not Friday. So
It's
that's
hump day.
good. It's hump day. It's
That's right.
Wednesday the 13th, 2026. My name is Alan. I'm here with Matt. This is the Option Genius Show, and we are here to help you trade options in this crazy topsy-turvy market. Just in case you don't remember, trading is risky. You cannot lose. Well, you can lose. No, I cannot lose. That would be
Yes.
nice. But no, you can definitely lose, and you will lose. Guaranteed. That's like the only thing that's guaranteed about it. Like, yes, you're gonna
Truth.
lose money.
That is the truth.
You will not win on every single trade. You will lose, and you just have to deal with it. So, uh, we are here. Markets are roaring, all-time highs again today.
Again. Yes, sir.
Um, it's baffling. Most stocks in the S&P 500, which has 500 stocks, most of them, the majority, are down, but the AI trade continues to roll.
That's right.
A whole bunch of supplemental things, Micron, SanDisk, all these others, the semiconductor names, they're all still rolling. Micron's up another 4.5% today. If you're a power company, you're doing good. If you're a builder or if you have anything to do with chips, you're doing great. Your stock just
Yeah.
continues to rock and roll.
Looking at
And
NVIDIA.
yeah, Nvidia is hitting an all-time high today. Nvidia is actually going up slowly, so it's not because I think they're still the biggest player in the field, the big dog, but their share is being eaten away
Yep.
because other people are coming up and making their own chips and doing other things that Nvidia used to be the only one that they were
Yeah.
doing.
Your
So
competitors will always rise to the occasion.
yeah, and now their biggest customers, which are the big seven, now they're trying to make their own chips or they're making deals with others to make chips.
Mhm.
Google is in the chip business now. They're making their own chips. And so Google also all-time high today. Texas Instruments all-time high today. It's insane. Tesla's making 52-week highs. It's like, what? They stopped selling their two best models, the two most expensive models, and their stock goes up. So
Yeah, it's a
they're
it's an
selling
interesting
fewer
time.
cars. Yeah, they're selling fewer cars and their stock is going up.
So do you
Um,
think this is a bubble, Alan? Do you
Oh,
think?
definitely.
Yeah.
I think definitely. I just don't know when it's gonna pop. What inning are we in? I've heard everywhere. Yesterday, I heard one guy talking about, oh, we're in the third inning. Somebody else 2 days ago, oh, we're in the eighth inning. I'm like, okay, I don't know. I don't really don't know. I think part of it is because of the spend. Like if people keep spending, which the big seven are spending close to $1 trillion. If they keep spending, then the stocks that are getting the money, the companies that are getting the money, their shares will continue to go up
Hmm.
for a certain amount. Um, but if they stop or they pull back, once we see a crack, then it's gonna, you know, go down
Yeah.
really quickly.
A lot of
Yeah.
these companies are cutting their workforces in a
They're
big
blue
way.
collars. Yeah, the blue collar
They're,
workforces. I mean, that we've seen many companies, not just the big seven, but we've seen others as well, and they're all blaming AI. So I don't know if it could be the economy is getting softer, and they're like, yeah, we're not making as much money or we're not having any new customers come in, so we have to lay off people, and that would be really bad for the stock. Right? If they said,
sure.
"Oh, hey, we need to lay off 10% of our people because we're not doing a good job." But if they
Yeah.
can say, "Oh, yeah, we're using AI now, so we don't need these 10%," then the stock goes up. So it's like, okay.
Yeah. It'll all come out in the wash soon.
Yeah.
Some point.
Yeah. And so yeah, if it's a bubble, that's a question. I think definitely for sure. I just don't know when it's going to pop. Yeah, there's just too many um similarities between this and 99, what was going on. So um it just feels like it all over again. And when you have stocks going up 5%, 10% day after day after day, I mean, how long can that last? And some of these are crazy.
I did a double take the other day on Micron. I was like, whoa, I mean, up 100 points in a day. And I was like, wow. It's like, ripping.
Yeah, yeah. I mean, we have some of these names that are on the threshold list. and they're on it multiple times. It's like, oh, it costs 200, and it took one day to get to, profit target. Then it crossed 300. Okay, then it crossed 400.
Super,
Then it
super
crossed
threshold
500.
stocks.
I was like, Jesus Christ, these are insane. These are just going up and higher. Like, okay. Um, I was doing some research on and building these little AI tools to try to tell me, okay, hey, how do we find the best stocks and whatever. And one of the things told me to that the best stock out of all the ones that I had analyzed was called Flex, Flex. And okay, so I'm like, okay, this was like, oh, this is my highest conviction. So I'm like, okay, I took a look at Flex. So a year ago, it was trading at about $40. Okay. They just had earnings recently. When they had earnings, it was trading at about $92. So it went from 40 to 90 in a year's time. So that's like a pretty nice steady ascension. I'm like, oh, I would like this stock because
Yeah.
it's not up and downy. It's just doot, doot, doot. Um, they just had earnings and it went from 92 to 133.
On earnings. Wow.
Yes. So what is that, like a 25% gain or 30% gain just on earnings in
Good
one
day.
day? And I'm thinking, okay, AI, I think you missed. It's like I think it's too late now. That was a week ago. And it went to what is it, 133? Now today it's at 147. So it keeps going. I'm like, okay, Mr. AI, maybe you know something I don't, but I don't know, man. The indicators, that tell you how overbought it is, they're like off the
Yeah, like
chart.
way off. Yeah.
They can't handle it. They're like, what the hell's going on? They're off the chart.
They say beware of the hockey stick pattern where it's just like whoop, straight up.
No, this is not this is like basically an L. It's like zoom. It's like just straight up. So, um, but yeah, it's just just hang on to what you got. Our Crusher is doing phenomenal.
Mhm.
The Crusher is doing phenomenal. Market Power is doing phenomenal. Um, we had a blip yesterday. I mean, it was a signal. I don't know if you got the double dip yesterday, but it would have worked
Yeah,
fantastic.
I missed it.
You missed
I was
it.
so close on doing it, but then I pulled back and um, I was gonna wait till I was gonna do it later, but missed the opportunity.
Yeah, that one didn't get a chance.
Yep.
It was the big down day yesterday, and then the market just reversed.
Yep.
I was like, oh man, this is gonna be a bad day for me. Like, okay, I'm gonna lose a bunch of money, and then at the end of the day, I'm like, what? Really? That's it?
Yep.
Oh wow,
Hold
everything went
on.
back
A lot
up.
of intraday moves.
Uh-huh. Um, and then Trump's in China, so we'll see if anything good comes of that. Maybe some deals. He's taken like half the Silicon Valley CEOs over there, so they're all trying
My
to
my
get.
theory is that it's gonna be generally supportive. Like I think he's gonna, come out of there and they're gonna come to some kind of understanding, and I think the market will continue to go up after that. I could be wrong, but I think that's generally what he's going to present. That it was the best meeting that's ever been had,
I agree.
right? Yep. So
I agree. Yes.
I think the markets will be sideways to up, at least for the next few weeks or a week until he returns, or next few days.
Yeah. And then we have Kevin Warsh. He's getting sworn in at the Fed as the new chair. So we'll see what happens there. But everybody's saying that the cuts are off the table for now because the inflation numbers are so coming in so hot right now.
Hmm.
So we'll see. We'll see what happens. His first meeting is in June. Maybe we don't get a cut in the June, or maybe we get a quarter cut in June. I don't know. I
Yeah.
think he has to get, corral the others into his way of thinking. He's got, I think, five that were appointed by Trump, including himself, but then there's another six that are in the other camp. So we'll see what happens in
I
terms of
wonder if
cutting.
do you remember Honing, Hoenig, Honing? He's like
Mm.
the one dissenter that's always been the dissenter through all these years. I think he's still there, but he's like the one guy who's like, no, we shouldn't cut, we shouldn't cut. He's just
I
like,
don't know. I don't know.
yeah, check
He,
he's still
yeah.
there.
So they change every year,
Yeah.
and so some of there might still be there, but he might not be a voting. So
Mhm.
who knows? Um, but yeah, so it's like Powell's staying. If Powell had left, Trump would have gotten to put one more person. He would have chose his, another person, and then it would have been 6-5 in Trump's favor.
Yeah.
But because Powell stayed, it's 5-6 in against Trump's favor. So a little bit of, I'll get back at you, kind of thing.
Yep.
I probably would have done the same thing.
Yeah, you won't forget what he said, especially how he embarrassed them,
Yeah,
you
like
know.
what the hell, man? You going after me in court? You're making fun of me, telling me all, tell everybody I'm an idiot and all that stuff. And it's like, yeah,
And then you were the one that hired me.
yeah.
So
Well,
it's
that was a long time ago.
I know, but
Trump doesn't
still, it's just
care.
like, yeah, I know it doesn't, but it's just
He
interesting.
hires and fires just like on a whim.
It's like, I'm so excited to appoint Jerome Powell. I hate Jerome Powell.
That guy's such an idiot. Who
Yeah,
put him there? Oh, you did. Oh, okay. Oh, never mind.
I have great judgment.
Yeah. All right. So,
Yes, sir.
everything right now just going. Everything is doing well. Not everything, not all stocks, but if you're in our ecosystem, things are doing well. Um, and so I did want to talk about the real way to make money in any market, even though we're talking about right now an up market, a market that continues to go higher. It doesn't always happen, and there are stocks that are not they're not going up. They're going down. They're going sideways. Consumer discretionary names are really in the tank right now. Lululemon, Nike, um, the dollar stores are selling off.
Yeah, that tells the
Uh,
real story, right? Of the middle class. And
yeah, so some of the markets is doing well, and that's pushing the indexes higher, but it's only a matter of time before they stop or go back down. And so I happened to see a book by our favorite person, Mr. Jim Cramer, um, called "How to Make Money in Any Market." And I was like, man, that is such a good title. That is an awesome title. I love this title, man. I wish I had come up with the book with that title. That's like,
and you
you
assume
know,
that there would be lots of books that would say that, right?
I would assume
I
that,
would.
yes,
Yeah.
because you can't just make money in an up market. And I guess that's what they tell you to do. They tell you to buy and hold and just sit there. And if it goes down, don't worry, it'll come back up again eventually. Although in the 99 crash, the dot-com crash, it took the NASDAQ about 20 years to come back up again.
Yeah, the lost decades. Yeah.
Yeah. So like if you were like, I mean, I was a teenager at that time. I didn't really care. I was like, okay,
Right.
whatever. I don't have money
How
to lose.
frustrating that would be. You invest and 20 years later, 10, you get nothing.
Exactly. And so yeah, but if you were in your 40s, 50s, 60s at that time and you hit that big whoosh,
Yeah.
your whole retirement plan is out the window. You're going to be working for the next 20 years.
Hmm.
Um, and so I thought, okay, let's read this book. Let's see what he's got. I want to learn. And I do admire Jim Cramer in a way. He's done a lot of things.
Ton of knowledge.
He's very flamboyant now. I think I don't know if he's really like that or if that's just for TV. But I mean, he tells his whole story in the book where he started off as a reporter coming out of school. And he went to Harvard.
Mhm.
So, coming out of school, he wanted to be a journalist. So he was a reporter. And then he had to sleep in his car because he couldn't make any money as a reporter. And then finally, he got a job on Wall Street. And then he went to Goldman Sachs and went up the ladder, started his own hedge fund, did well. I don't know why he shut it down. And then somehow ended up on TV. And he's been on TV for 20 years. Um, and still there are thousands and millions, I don't know how many millions, but there are people that watch him every night on his show, Mad Money, and they've read his books. Even this book, it became a New York Times bestseller, like as soon as it came out. So anything he says, people listen to. People, even though there
Like
are
Kramer
sites out
effect.
there. Yeah, I mean that's his thing, Great America, right? And then, but there are sites out there that are like, okay, we'll do the opposite of everything he says, and they still end up making money. So it's like, okay, I don't know.
Yeah, it's quite interesting, right?
Yeah, I mean, it's really hard to do what he does. Go on a show and just people, tell you, what about this company? Buy or sell. and that's the only choice you have.
But he's such a great knowledge base. He can talk about all the different sectors and every company, and
You could,
he's like the
yeah, I
walking
mean,
encyclopedia to some degree.
yes. He knows all the sectors and all that. But I don't think he knows every company. I think he just pretends he knows every company.
Well, yeah, and then he hits a bunch of buttons like, yeah, yes,
Yeah.
buy.
Yeah. If he hears something that he's never heard of, he's like, you know what? Yeah, that's a good one, but I'd rather go with this one instead.
Yeah.
It's like, I don't know that one, so I'll send you to this one.
And
But I've learned from him. One of the things I learned from him was if you're going into a sector, go with the best of breed. Go with the best company in that sector.
mhm,
It might not make the most money, but it's like the safest.
yeah,
So, um, and so, saw the book, picked it up, and I was expecting, I don't know what I was expecting, but I didn't get the the promise of the book,
you didn't
which
take the
is
book home. That's what you're telling me.
I got it from the library. I did. I picked it up at the library. I
Yeah.
did take it home. I read it at home. I flipped through it, um, and it was disappointing. Um, so basically, the summary of the book, is that anybody can invest in the market, and you should invest in the market because it's the best way out of everything else to invest and make money. Stocks go up for the long run, and you just have to do some research into the stocks you're going to buy. And then after you buy them, you just stay on top of them and do research. And now you can use AI to do the research for you. So it doesn't take a lot of time. And then, just stay in the stock market. So basically, it's buy and hold with telling AI to do your research for you. And that
Right.
was the gist of the book. So even when things go down, don't worry, it's going to come up, just pick the right stocks. And
But
then
everyone has a different time preference. That's my biggest
yeah, yeah,
question, right?
yeah. So he's like, you want to have stock ownership, you want to compound your money, so don't take it out, just keep buying more shares, keep doing that, and have conviction based on your research. So don't be jumping around from stock to stock, but pick one, stay with it, and hold. Um, that was the big thing. And it's like, if the market goes down, hey, that's awesome because you get to buy more. Like, but I'm already, putting money in. Like, I'm following you. I'm listening to what you're saying. I'm putting in money all the time to compound it. When the market goes down, I don't have more money to put in at the bottom.
Yeah, I have no dry powder,
Yeah,
right?
exactly. I don't have millions of dollars just sitting there on the sideline doing nothing that I could go bottom fishing. Um, so that was the book, and I was like, he didn't talk about options at all, which totally surprised me. Now, maybe this book is for, people that have never bought a stock before. Maybe that's his target, but anybody who already has stocks needs to know how to use options.
I agree.
Even if they don't, they should know how to use them. And I think it's a disservice that he didn't mention it at all. Because when you're talking about how to make money in any market, there's three markets. There's the market that's going up where everybody knows how to make money.
Yep.
There's the sideways market, which Kramer says you make money there by having dividend stocks.
Hmm.
Okay. Yeah, that's called passive trading. Right? That's like the foundation of passive trading. Good stocks that pay dividends. Thank you,
That's
sir.
right. Yep.
Um, and then the third market is the down market, where Kramer has really nothing to say except just hold on, do your research, cut your losses, and invest more. Um,
So cut your losses. That's an interesting statement in a down market.
yeah, like if it's going down,
If you're already in, like you, and he wants you to hold, then where you're
based
cutting.
on the research, based on the research.
Okay.
So like if for example, if something changes in the company,
Management or CEO.
management, CEO, the style, a lot of times you can buy um companies that are doing well, like like a consumer name, like a fashion brand, and all of a sudden, they're not cool anymore, and then the stock never recovers. I remember years ago when I was doing the Rule One thing. I didn't join the programs or anything, but I had the book and I was listening and trying to figure it out. And there was they had some community or something, so I was in there, and I'm like, okay, based on the book, Pac Sun was a great name. Pacific Sun. I don't know what I mean, that's the company name, Pac Sun. I forgot the ticker. I think it's P Sun or
I'm
something.
just laughing because I read all the books
Yeah.
myself. Yeah.
And it fit all the criteria. The stock was going up. You have to, revenue going up, margins going up, all that stuff. And it happened that they sell clothes to kids, teenagers, and they were very fashionable and cool at the time. Um, but then we had the Great Recession, and PacSun, just like everything else, just went, none of that helped the
Right.
stock.
Hmm.
And I don't know if it has ever recovered. Right. So if you had bought
Probably
it,
not. I've not heard of it, so I
exactly.
think
I mean,
so. Yeah.
they might have gone out of business. They might have been bought out by somebody. But they fell out of favor and it was over. So it doesn't matter how much research you do, stuff changes, and in a down market, it's going to go down. So how do you alleviate that? How do you really make money in any market? So up markets, right? Everybody knows how to make money. That's fine. Okay. Sideways markets, what would you do? Like if we were going sideways, what would you tell somebody?
From that perspective, well, I mean, the real danger in a sideways market is getting ahead of when it's going to things change, right? Like we were just talking about. So you'd have to be really on the ball of as far as seeing in the company and doing your research whether it would be changing, right?
Mm-hmm.
Um, and a lot of that is the debt load that the company's holding, um, different things like that. That's hard to do, right? So a lot of times people are just holding sideways, they're not doing anything, and then all of a sudden the fall happens, right? The crash, and then they can't do anything. So now you're into the downward part of the market, right? There really isn't any advice to do that other than what we're teaching. That's why options are so important because you can make money
Right.
regardless.
So like I just recently, Nvidia today has hit an all-time high.
Hmm.
But you look at the chart for the last 12 months, and except for maybe the last week or so, it's been going sideways for about 12 months. A long time, 6 months, 12 months, a long time. It has just gone up and down, traded in a range. And this is the biggest company in the world, market cap size. Almost everybody has it, every ETF has it. But if you owned it, you didn't make any money because it just went sideways. So you could do all the research in the world and tell you, yeah, yay, this is the best company, this is the future, blah, blah, blah. But for a year, you didn't make any money.
Well, even
Uh,
take a year of, I don't know, it's been a year and a half where it went down to 99, right?
mm,
So everyone was panicking with NVIDIA. Remember that. So
yep,
how would you know ahead of that, right? Um, would if you hold on? Would you held on? Right? It's the same questions.
right. So how, I'll come back to it. If you were long NVIDIA a year ago, or, even now, or 6 months ago, how would you have made money on it while it's moving sideways? Or is there a way? Because it doesn't pay a
I'll,
dividend, not that I know of.
I'll tell you because my wife's in it. So
Okay. So what'd you do?
we're currently so I do covered calls monthly on it. So that's it's moving sideways and I'm getting good premium. I go about a month out and do covered calls on it. So we're already comfortable because we made money with Nvidia going up, right? It's appreciated very well. So now we're fine with it being called away. So I'm doing cover calls above where it is. So it's all gravy at this point. So, that's a nice place to be. So it's moving sideways and now we're making money off of that as it's appreciating, right? So you're making money along with the appreciation and as well as for doing the cover call option.
How much money do you make?
You can make let's say, like a 30 or Delta call, you're making close to 500 bucks a month or more.
Okay. A 30 delta put, or no, a 30 delta
Oh,
call.
cover call on it.
Okay, so let's say right now Nvidia is at 227. It has gone up. It's broken out of its range, which was about 205, I would say the range was.
I bet you
And
could do a cover call at 240, 250, somewhere in there.
okay, so you do have earnings coming up in 7 days. Okay, on the 21st. So, oh, sorry, on the 20th. So 6 days. So
Mhm.
would you skip for earnings?
So you could see where it is, right? Maybe you're making money on the option. You could buy it back, skip the earnings, and then put it on after the earnings. You could do that.
Okay.
Really scared about the earnings. Or if you, like I said, if you are comfortable getting called away at a higher price and it screams up, then fine.
Okay. So let's say
Wait.
there's no earnings. All right. Um, Now that's going to skew our numbers here, but let's say there was no earnings, and I'm looking at, and you said a monthly? A monthly, you do
Yeah,
monthly
I'd say
calls?
like 35 to 45 days away, somewhere in there.
All right. So 35 days. The monthly option is the June 36 days to expiration. And you said give me the 30 delta. So right now the 29 delta is the 250 strike,
Mhm.
pays about $570 per option that you
Yep.
sell.
And you could go
So,
further out if you're a little bit more uncomfortable. So go out to 20.
mhm. But let's just look at this one because this is the one you said, about 30 is what you do. So I am, let me look at this in a normal account. Okay. So according to Thinkorswim, my max profit on this would be $565. And with margin, my buying power that I need for this trade is 2,270. 2,270 divided by 565. Whoops, I did that wrong. 565 divided by 2,270 is a 24.8, 25% return in 36 days.
Mhm.
Now that is if you have margin. If you do not have margin, you need, I gotta find an account or you need um, the entire amount of share or the amount that you could lose. So this is what, 250? So 250 times 100, you need about 25,000 minus the 565. So you need 24,435. I'll just do 565 divided by 24,000 to make it easy. You can make about 2.2%. Let's just say 2% in 36 days. So if it's in a retirement account with no margin, you can make about 2%.
Mhm.
If you're using a margin account, you can make about 20, was it 24%?
Yeah.
Um, and that's because we have earnings in there, so it's a little bit goosed.
That's a little
Uh,
bit. Yeah.
but if earnings was not there, on the retirement account, you can probably make 1%, and on the regular account, you probably make 10 to 12%. So probably about half of that. And then if you look at, let me see, if you look at a portfolio margin account, the margin for a portfolio margin account is 1,600. So 565 divided by 1,600, that's a 35% return in a month. Now, when you sell this option, you get that cash up front, the 565, that's yours per every 100 shares,
Mhm.
right? Um, if Nvidia stays below $250 during this time, this 36 days, you keep that money. And so you just made whatever percent you made and you still own the stock. If it goes above 250, then you're supposed to have to sell the stock if you don't do anything. They'll take the shares from you and they'll
Right.
pay you $250. Now, in a retirement account, that doesn't matter because you don't have any taxes to worry about, right?
Right.
In a portfolio account, depending on if you want to worry about capital gains or not, then maybe you don't want to sell the shares. So there are ways where you can just buy back the call option if you wanted to, or you could roll it forward, or you could roll it up and out. So there are different techniques that you can use. But sitting on a stock for a year that's going sideways, even though it's a great company and just going sideways, you could have still made, if you're doing it in a regular in a trading account, um, you could have made an average of maybe 10%
Yeah.
a month. Maybe. I
Hmm.
mean, that's high. Normally it's not that high, but Nvidia is volatile.
Hmm.
I would say normally you can make, 4% on a naked foot. This one is really goosed up because of earnings and the volatility and the whole AI stuff. And so right now, call premiums are at a premium.
Yeah. Yeah. Got
Um,
a goose premium. Yeah. In
yeah,
a way. Yeah.
so the normally, the puts cost more than the calls.
Hmm.
But right now with all the AI names and everybody trying to buy calls to make it go up, the call options are actually worth more than the put options. So the skew is flipped. And
Yeah.
so if you are a call seller right now of these names, you're making a lot more than you normally would.
Hmm.
And in a name like this where it just went sideways, you
And
could have.
I like it. I like the way it's behaving, right? So that's fine with me at the moment.
Yeah. And I mean, this is the biggest company in the world, market cap wise, and it sells like right now, 110, 111 million shares traded today, and we still got time before the close. And so it's a very calm stock. It's not going to go 20% higher or 20% down in a day,
Yeah.
right? There's a lot of people that own it, and to push it higher takes a lot of money. And
A lot of money.
so it's not going to be the one that's going to make you rich anymore unless you own it for the next 20 years and it keeps going higher and higher and higher. But if you're selling options on it, you don't care if it doesn't go up.
Exactly. Exactly.
Um, and that's just one strategy that this guy left out that he could have exposed people to. Um,
You can consistently do it every month.
mhm. And that's one strategy, and that's if it's going sideways, right? You can also do an iron condor on a sideways where
So
you're making like 10% easily a month on that. Um, Even in a bull market, if you use options, you could use call options instead of stock, and you would make more money if the market is just running like it is right now. And that's why all the call options are worth more money
mhm,
because everybody's buying call options. People are not buying the stock as much because they know that there's a lot more
somewhere.
goose egg or the
Yeah.
goose premium in the thing. And then when you have a down market, right, you can still sell your covered calls in a down market, but you can also do buying puts.
Hmm.
And so let's say you have Nvidia and you think it's going to go down. Well, you go ahead and you buy a put option to protect yourself. And then if you sell a covered call, that will help pay for that put protection,
Right.
which is
Right.
insurance. And they call that a collar, right?
Yeah.
So if it goes down a certain amount, you're protected. If it goes up a certain amount, you're protected. And as long as it stays in that range or even goes down, you cannot lose on a collar. That's the whole point of the collar. Like, okay, hey, I know something is happening with this stock. I don't want to lose my stock, right? But it's going into earnings, or there's a Fed meeting, or there might have I don't know, something like a Tesla where they're like, oh, they're having this big announcement. We don't know what it is. It might be bad or something. I don't know. It could be any number of things.
Yeah.
And so you decide that, you know what, I want to just own this stock for a while. I don't want it to go down and cause me a lot of loss. I can't get out for whatever reason. Maybe it's a company that you work for and you cannot sell the stock for some reason, right? Or it's a capital gains reason or whatever. And you think, hey, market might drop. Well, buy some puts to protect it going down, and then you sell some covered calls to pay for those puts as much as you can. It might cost you a little bit, or you might get it for free, depending on how you set it up. And that way, if the stock does go down, you lose money on the stock, but then you make money on the puts. So it's supposed to balance it out,
Hmm.
right?
Just think of um, the mental space that you put yourself into. You know, you're so much more, you have less anxiety, right? Because you can do something about it, no matter what it does.
You're in control to some
You're in
degree.
control. You are, right? And that speaks volumes to your mental state, right?
Mm-hmm. Yep.
So you're in a stock and then you're sitting there and buy and hold, and that's all you do. Yeah, you're going to be anxious and you're going to be in a not so great state of mind, right? So
No,
have the
people.
knowledge to do what you can do. You have ownership. You have not ownership, but you have control over the situation.
Mm-hmm. Yep. And even right now, with these stocks that are going higher and higher, um, yes, you could buy the stock for sure, right?
Hmm.
Um, but you can make probably, depending on how much is going up. If it's going up 5%, 10% a day, no. But by that time, it's probably very expensive, Like some of these names that I'm looking at that are just going up higher and higher and higher. Um, I'll give you a couple of them. Whoops. Give me a second.
You choose a micron.
No, I'm looking at Casey's General Store.
Casey's General Store. Okay.
Casey's General Store, CASY.
Didn't even know that was a stock.
It's I have no clue what they do. I guess they're a general store. Uh, it's a convenience store company. So it's a gas station. They
Hmm.
have soft drinks and sports drinks and pizza, donuts, breakfast items, candy, etc. So yeah, it's a gas station,
It must
right?
be in the Midwest or something. I don't recognize it.
Iowa. They're from Iowa.
Oh, there you go. I don't know.
But if you take a look at the stock, right, it has gone this year in 1 year, it has gone from $430 to $888 as of today
Goodness. Wow.
as a gas station. And that's, that's nothing because it came from um, about $190 back in 2022. So it's a multi-bagger, from
Yeah.
200 to almost 900. This has been on our list of thresholds. And I think it's going to get to 900 and be on the list again. And so I have been selling naked puts on this stock, and it has done really, really well. Much more than the stock itself if I had owned the stock. Because I mean, it's $885 a share.
Mhm. Are you
That's
doing are you doing monthly on it? Is that what
I'm
you're
doing weeklies. I'm selling
doing weekly?
weeklies.
Okay, well, okay.
And so every week I like to go in and I'll sell something. And it makes a good $1,000. That's
Yeah,
my
you're
aim. Like on each
cleaning
one of
it
these, I
up.
want to make $1,000. And so it's doing really well. And that's just one of them. There's another one that is up majorly today. COHR Coherent Corp. This is a $407 stock today. It's up almost 10%. It's an AI name. And
Hmm.
so I don't want to own these stocks. I don't know what they do. I really don't haven't done the research on them, but they continue to go up day after day after day. And so I am selling naked puts on them because they still go up and they are threshold names. And so I have the belief that they have a lot of momentum behind them. They have a lot of buying power behind them that are pushing them higher and higher. And that's why um, they're on the list. And this one, COHR, has been on the list multiple times.
Hmm.
So right now it's at 400, but it was on the list at 200, then 300, now 400. And actually, today it's going to close above 400 for the
Yeah,
first time. And so, as a stock that's closing above 400 for the first time, it'll be back on the list for thresholds. And the 400 threshold means that it's going to get to 440.
yeah.
We don't know when it's going to happen. It might take a week, it might take a day, it might take 6 months or more. But we do know that it will happen 90, 95% of the time, right? And so, yes, I can sell naked puts against it until it gets there. Now, after it gets there, then I don't know what it's going to do. So I'll go looking for something else. That's another threshold name. And
So you just don't hang on the same one, is what
I
you're saying.
do not know. I rotate. I rotate in and out of them. If they're still going up, like Casey's has been going up, then I stay in that one. But a lot of these, like Casey's, does not have weekly options. So that has caused an issue for me. Like I want to sell it every week.
Yeah.
But for Casey, I gotta go into the 36-day option, and I don't know if I want to be in it for that long. So I'll wait till that one gets down to about 14, and then I'll go back into that one if it's the stock and the if it's still good running well.
So for the viewer, what would you do if we had a big correction and you got caught in one of these or signed on one of these naked puts?
So it depends on how bad it is.
Hmm.
If we start turning over and the names start going down, I will start lightening my load, and I will only want to keep the best ones. Um, and so it's it's like it's difficult to answer because without more information, like is it the
Right.
whole AI trade is falling apart or the bubbles popping, or is it just we're getting more tariffs or something, something like that. So it depends what the reason is for the drop. Um, but I'm being careful that I'm not overloading myself with too many of these naked puts so that if they all go down, like if the whole market drops tomorrow,
Right.
I'm
And then
not
you're signed and boom, boom.
I'm
Yeah.
not holding the bag with all of these and having margin calls and whatever and having to buy all these stocks, 10%, 20% lower than they are now. And so
Right.
when I do sell a naked put, I'm way out of the money. You said you do a 30 delta call on a covered call.
Generally 20 to 30.
Yeah,
Yeah.
on my naked puts, I'm doing less than 20 delta.
Mm.
So I'm very far away from the money, um, and still getting a decent amount of return. So if they start dropping, I'll probably start lightening the load and start getting out.
Yeah.
If I think if it's a long-term thing and not going to recover. So the other point is that's one strategy, right? The naked put strategy is just one strategy. You don't want to do that with your entire account. So
No. But
it's a portion of the account. I keep it under a certain amount. Like, okay, if the account is this big, then this percent goes into margin for naked puts. And so that way it kind of limits the damage if there is a big drop.
right.
So
Okay.
because I know this is a bullish trade, right? This is
Yeah.
a definitely a bullish sideways could be, but most likely, you're if the stock is going up, you're selling naked puts on it. And a lot of people are doing the wheel, but they're doing it on the wrong stocks.
Hmm.
And we said that constantly. So that's another strategy that is a really good one that people have been using. Um, strangles, straddles, those also work, especially in sideways markets. Um, and then, like I said, when the market turns or when the market goes down, put spreads are a great choice. Like right now, we were doing the credit spread mastery course yesterday. Sorry, not put spreads, but call spreads.
Yeah, we did majority call spreads.
Call
Yeah.
spreads we did. We sold a lot of call spreads yesterday in the credit spread mastery because we found a lot of stocks that are not going along with the ride. They're
Mhm.
not going up, they're going down.
Yeah.
So we're like, okay, this is good. I mean, it's best case for us because we have, okay, some stocks that are going down. So we're bearish on these trades. And then we have the other stocks that we're bullish on. So we got our naked puts on those, or, maybe a long call or covered calls or something. So we're balanced in what's going on in the market. So if one side, so it flips, we'll make money on some and we'll lose on the other, so it'll kind of balance out.
Yep.
Um, and so that is, how you really make money. And so there's cash secured puts, which
Hmm.
if you're in a trading in a retirement account, there's covered calls, there's callers, There's bull call spreads, which is a bullish um, trade. There's the bear put spread if you're bearish. There's straddles and strangles. There's iron condors. There's calendars. There's protective puts, which is puts as insurance. And these are just the most basic of the option trades that we're talking about.
Right. And you don't have to get super complicated to make
Mm-mm,
money. You don't.
no.
So that's a big, you know, misconception that people have.
Mm-hmm. Yeah. They're like, oh, I need the special thing, the special indicator, or
I
the
need the
special
most
secret.
complex because it sounds complex. That means it's better, right? And that's
Mm-hmm.
not true at all,
Yeah.
right?
There was an article today written by an options guy who said that, hey, we want to do like the trade was a risk reversal on gold. So he's like, okay, gold is consolidating and it's going to go higher from here. So what we want to do is we want to buy an at the money gold option. We want to sell an out of the money gold call. So we want to buy a gold call at the money. We want to sell one out of the money. So, that's basically a debit spread, like a bull call spread, because you want gold to go up. And then you want to sell a naked put on gold out of the money. So you got one long option in the middle. You got a naked put sold on the bottom, and then you have a call that you sold a top, and that's called a risk reversal. Now, he just made it so much more complicated than you had to make
Yeah,
it. you know, and
doesn't need
so
to be that. I mean,
yeah, I
people
mean,
do it, but
right? I mean, if you think gold is going up, you could just you could just do the naked put. Um, And yes, you might make more money if it goes up this way, but then you're also adding more money to the trade. And if it goes down, then you're losing money on the long. And it's like and he said it's for advanced traders, right?
at least he said that.
Yeah. He said it was advanced traders, but it's not like, it's simple to understand. But oh yeah, that looks great. But what do you do when it doesn't work? That's the problem.
Hmm.
Because the more complicated it gets, the more harder it is to unwind and adjust and all that stuff. So, but yeah, I mean, this is the real way to earn money in any market, not just buy, hold, sit, and hopefully it doesn't go down. Do your research. Or now it's like, oh, have AI do your research. Okay, that's great, but we just proved it. NVIDIA research looks great, but the thing went sideways for a year.
Yeah. So what can you do about it, right? So
Yeah.
yeah.
So you have two people, right? You have one person who follows Jim Cramer, doesn't know anything about options, and he's like, okay, NVIDIA is a great company. I'm going to own NVIDIA. And for a year, he made no money, and his money's just tied up. And he's now 1 year older, 1 year closer to retirement, and nothing to show
Oh,
for it.
dead money.
Dead money. And
Yeah.
then on the other side, you have your wife, right? She has some NVIDIA. And she's like, I like the stock. It's a good company. Research is good, but I know how to sell a covered call, which takes all of 5 minutes a month. Right?
If that,
If
right?
that. And
If
so
that.
she does that month after month, and she makes, who knows, maybe she made 20% in a year or 30% in a year, while that other guy made nothing.
Yep. And it's a travesty that many people have no idea that you can do this.
Yes.
And that's why we're here.
And that's just like we talked about several strategies,
Just
but that's like
one.
just that's the
Just
most
one.
basic one. That's like you go to your broker and you say, I want to do options. This is the first one they're gonna let you do. Like if you don't know anything about anything, they say, okay, here, try this. Play with this. It's like a toy, it's a beginner's toy. Go play with that one. And it gets some experience and then we'll let you do more.
Right.
But and so you don't even need any kind of training to do that one. It's that simple, you know? And it's, yeah, like you said, it's a travesty that everybody doesn't know this, and we just gotta get the word out. So if you are watching, please subscribe, please tell your friends. And you know what? We talked about this earlier, me and you, Matt. Like, if there's anybody watching and you want us to, if you own stocks and you don't believe us, or you want us to show you how this would work for you, I challenge you or I invite you to reach out to us and say, hey, look, I have a whole portfolio of stock. I want to know how much money I can make using options.
Sure.
And come forward. We'll bring you on the show and we'll do it live. We'll do it in front of everybody. We'll be like, okay, how many, what do you got? You know, it's like, okay, I got 200 shares of Apple. I got 400 shares of this, 1,000 shares of this. All right. Well, let's look at the current pricing. Let's look at the option chains. Let's look at what options we would sell and we
Mhm.
can debate it. And then we can figure out, okay, how much money are you leaving on the table every single week, every single month, every single year?
A year. Yeah.
And it's incredibly high.
Yep.
So, free service, you know, we invite you to come on board and we'll do the analysis with you and show you what you are leaving on the table.
Please do.
So,
That'd be a lot of fun.
yeah, I
That'd be a
think
lot
you
of
would.
fun.
And so that's it for today's show. Thank you all for tuning in. If you have not subscribed to the channel, go ahead and do that. And yeah, keep trading.
Keep trading. Keep plugging away.
Keep trading. I don't know. I'm sorry, I didn't ask you, Matt. You want to add anything to that to the end?
No, I mean, I think you covered it. And like the main point is that, this is information that is out there. We teach it every day. And I challenge people, like you said, to just give it a try. Right? Check it out.
Mm-hmm. Yep. I was not watching the chat, so we do have a few messages in the chat. One of them is that PacSun still exists. My 18-year-old likes to shop there. I had no idea it was public. Definitely not my favorite store.
I just think of
Okay.
sunglasses. I don't know why. I think of Sunglass Hut. And my mind just,
Um,
yeah.
and then there's another comment. Casey's is like a Bucky's or a Wawa. So
Bucky's, yeah.
I don't know if you have any of those in Florida. Um,
But no, we do. I've seen Wawa, and I just stopped at Bucky's this past weekend. So yeah,
did you? Yeah, Bucky's is
yeah, Bucky's is
insane.
blowing up. Yeah,
I have like I don't get it, but like I do,
Costco meets gas station. That's what it is.
but it's not cheap.
No,
It's not. It's like they have clean bathrooms. Okay, I will give them that. I will stop there just because of the bathroom, and they get my business because of that reason. Okay, I get that part. Um, but they used to be cheap. You know, like the gas used to be cheap. It's not anymore. And inside everything is expensive, but it is like a general store. I mean, you
my
got two.
theory is it's the brisket sandwich. I'm sorry, that's
Is
what people
it?
go for. Yep,
All right.
you get a little
Okay.
barbecue sandwich.
Well, they do have fudge and
Oh,
hot,
they got
like
everything.
fresh fudge and the whole butcher in the back.
Every drink you could think of, every snack, right?
Yeah.
So
Yep.
yeah, that's definitely got a good model because
But the one thing they do not have are Starbucks Frappuccinos in the bottle. For whatever reason, they don't stock those.
really.
And that is my go-to to stay awake when I'm driving late at night.
I did not know that. You're
That's
into
my
the Starbucks Frappuccino.
the vanilla. I'm not a coffee guy, but the vanilla one doesn't take too much like coffee. So so it gives you a little boost, but they don't have those. So it's like, oh man.
Yeah, Dunkin' Donuts, that's my go-to.
No, yeah, well, Dunkin' also has the same drink now.
Hmm.
Anyway, all right, guys. Markets are still all-time highs, doing well. Um, we'll see what happens with Trump and with the Fed meeting coming up next week. So far, the no news out of Iran. We're still waiting on
I think it's on the back burner until he gets back.
maybe. Yep, I
Yeah.
think he has other things to worry about right now. And Trump and Iran is be like, yeah, we don't mind waiting. We'll wait.
Yep. Another day we're surviving.
Yep. So we'll
Uh,
see what happens. All right, my friend. We'll see you guys all on Friday and trade with the odds in your favor.
have a good day.